So get ready with me as I prepare for 3 stocks that are extremely overbought and I'm waiting for confirmation to short them. Let me go ahead and start sharing my screen with you guys. The first one that I want to talk about is I've shared it with you guys in the past before. After reporting earnings, Carvana gapped up. And again, none of these 3 stocks actually have to pull on back. I've been wrong in the past before. I haven't taken any of these trades just yet. The whole point is to prepare and create a plan of action before actually taking the trade. And if we do get confirmation of this thing showing signs of progress, on the downside, then yes, I would love to potentially short this. Carvana, again, now currently trading at a price point of 117. This thing can run up to 120, 129, whatever the case might be. It is overbought. And one thing that I've learned is, again, the longer it prolongs a pullback after quickly gapping up, the harder they will fall. So from the current price point, if it does return back to previous lows, this thing offers a 28% return. The other one that I want to bring to your attention is the NASDAQ market. NASDAQ market obviously has been incredibly bullish for now, right? Looking at previous highs, we're a little bit more on the overbought side. There's definitely more pullback potential than there is upside potential based off previous highs. So therefore, instead of shorting the NASDAQ market and making money as this thing sells off, I would just go long on SQQQ, which is the triple leverage ETF that goes up when the NASDAQ market drops. And the great thing about this is that if this thing does begin to indicate signs of an uptrend based off of previous highs, it offers about a 14% return, and based off of most recent highs is 12.99. That would offer about a 21% return. And one of the last ones that I want to bring to your attention is Snapchat. Snapchat, also because of earnings and yes, good guidance, has indicated signs of an uptrend. Now, again, this thing does not have to pull on back, but if it does and it begins to correct itself, again, it's extremely overbought as it gapped up within a very short period of time. So from the current trade price, if it just pulls back to the moving average, that offers about an 8% return. If it pulls back to the previous support that we've had around $14 after it reported earnings, that would be right around 14%. And then the downside potential, if it returns back to its previous lows, that would offer about 34%. And those are the 3 stocks. Again, I still want to plug them into that risk to reward ratio calculator, create my plan of action of what my entry, what my exit, what my stop loss would be, and of course have a better understanding of my risk to reward ratio and how many shares I plan to go into it with. I want to remind you that if you want to download your risk to reward ratio calculator, it is available for free and it's the first link in the description down below. Again, I do trade live every single morning. I just wanted to share some ideas with you, especially as the market's a little bit more on the overbought side. I'm sure it's been a little bit more challenging to find stocks that are good deals that are not extremely overbought. So again, just like we've done it in the past before, anytime the market is overbought, I like to create a plan of action for markets to pull on back so I can have a proper plan to follow that once and if they do begin to pull on back, again, I can take action and make some money on those pullbacks. If you guys have any questions, feel free to comment down below. And if not, hopefully earn your thumbs up. Please consider subscribing. And don't forget to check out our store at shoptechbuds.com. Right now, there's everything on the store is discounted up to 40% off. So if you want to check it out, it's going to be the 4th link in the description down below or shoptechbuds.com. Appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.